Welcome to AGORACOM via satellite. With us today is Dave Patterson, chairman of Donner Metals, trading on the TSX Venture Exchange under the stock symbol DON. As many of you know, Donner has a joint venture right now with Xstrata Canada on their metallurgy project in Quebec. Mine construction is underway. What we want to talk about with Dave today is some of the things he's been doing over the last month. Dave, welcome to the show.
George, thanks a lot. I appreciate being here.
Dave, one of the reasons we've got you on here is because you've got great insight into the zinc and copper world that goes beyond what most of us read in generic press releases and news items. So, here's the things what I want to talk about with you today. First, you're at the London Metal Show. Want to get your feedback on what the attitude was like over there. You also did your own road show throughout Europe, talking to some institutions and investors there. And then I want to get into copper and zinc pricing and demand dynamics and get your views on that. Let's start off first with the London Metal Show. Give us an idea of what the mood was like at the show this year.
Well, first of all, the London Metal Show is in London every year. It's not a trade show like the PDAC we have in Toronto. This is where institutional investors, brokers, analysts all get together for 1 year, hear technical talks, talk about new ideas in the mining, and put out their own reports of where they see copper or zinc going the next 2, 3, 4, 5 years. And I have to say, to a man, everyone was excited about where they see both the copper and the zinc market going.
Anything in particular they're focusing on? I mean, copper, it's no secret they've got guys like Goldman Sachs coming out and calling for $5 copper in the next 12 months. Sometimes I'm suspect of that because they may be talking their own book, but the actual companies in London, what was their reason for their optimism?
Well, really, the optimism comes from what we see worldwide in consumption. And the world, forget the blip that we saw for the 18 months of '08 and '09. We're seeing the world on a growth curve that shows zinc consumption growing at a compounded rate of 4% a year. During the next 5 years, we're seeing zinc production drop off something like 30%. So there's something's got to give, and you'll see that in the prices. We hear that zinc is actually in surplus, yet we're seeing the price of zinc continuing to rise. And that's in anticipation of the deficit we're going to see in 2012, 2013.
Now, I'm going to play devil's advocate here because I'm looking at the metal prices over here, and I see zinc over the next 15 months, average price, cash 3 month, 15 months, you're looking at about $1.13. Doesn't that mean that you're going to see new projects come on, though? Prices going up, so you're going to see new projects come on, drive up inventories, and perhaps maybe act as a suppressor to price?
Well, always, if you want to see higher prices, have prices go lower, and if you want to see lower prices, have prices go higher. I know that's an old adage, but what we're seeing here is that the world has changed significantly. And where I say it's significant change, growth used to be south of the border. We saw the world's economies all key off the United States. We're not seeing that now. The consumption of metals primarily goes to China, then India, Brazil. You've got countries that are going from an agrarian background, they're now becoming urbanized or suburbanized. And you're getting people that want to have a dishwasher, a washer and dryer. Oh, they want to have a car, they want to have their own apartment. All this is going to drive metal for the next 20 years. So the question you asked was why we're seeing prices going up. Are we not seeing the new mines coming on very quickly?
Right.
And what part of our new environment is that we're looking at it takes time to get a project through feasibility and then permitting and then construction. And some of these mines that are very large, they require a tremendous amount of engineering before they can go to the permitting phase. And you can have a discovery made 2 years ago that won't make it in production in the next 10. And that, that could be a lot of zinc coming onto the market, but it's not coming on in the foreseeable future.
So how long does it take for a typical mine to come on? Because I would think 2, 3 years. I mean, look at your joint venture with Xstrata. That looks like it can be ready in a couple of years. Why wouldn't I believe that maybe there are other similar projects coming on in a couple of years?
Well, one of the beauties about where we are, We have all the infrastructure in place. We do not have to have a mill re-permitted. It's already permitted. The tailings pond already permitted. All the roads that haul the concentrate or the ore are permitted today. So all those permits are in place. The only permitting that we required was a permitting to build a mine and the safety and the health, etc., from that building that mine. That is a rather quick process. And you can see from our example, we started drilling on a feasibility study, finished in March of this year, and announced construction starting July 10th. So, you know, and our feasibility study we received in September. So it really is the ability to fast track here in Quebec. And you do not find that in other jurisdictions.
So if you had to guesstimate, I mean, I don't think you have a pulse on every single potential mine out there, but if you had to guesstimate when you might see that flux of mines coming back in reaction to higher prices, what kind of timelines are you looking at?
I think probably starting 2017 through 2025 is where you'd see a lot of these coming on. And, you know, George, one of the problems in what we see is people think we're running out of metal. We're not running out of metal. What we're running out of is cheap metal, cheap zinc. Those days are ending. So the open pit mines where you could mine zinc at pennies a pound, those days are gone. We now have to start going underground. There's big mines. Red Dog is closing down. They're moving to what I call Red Dog 2. Capital cost is higher. Operating costs are higher. Other mines are being forced to go underground, or their zinc units are dropping, or they've gone so deep on an open pit that they have to push the pit walls back so much that their cash costs have gone through a transition, and they've gone higher. And this is one of those situations where, yeah, there's lots of metal, but at what price? And if nobody makes money at $1 zinc, then you won't have $1 zinc.
Well, and that probably fits into, I mean, the last conversation we had was right after the pre-feasibility study that was released by Xstrata, and we were talking about the numbers they used. And at the time, zinc was trading about 98 cents. And like I said, you're talking about an average price of $1.13, you know, between $1.12 between cash in 3 months. So we've had a pretty significant move. That's got to make you guys, that's got to make you and Xstrata pretty happy with that kind of move?
Pretty happy when, as you pointed out, the sensitivity that our project has to the price of zinc. Well, at $1.20, that's a 50% increase over the feasibility study model. $1.20 is, a number of analysts are picking $1.20 as the price of zinc for the exit for this year. And they're picking $1.50 as the price of zinc in 2013 when we start full-scale production.
And reminding go ahead, sorry, go ahead.
So, you know, what we're looking at $1, and let's even keep copper where it is right now and say it's $3.80 to $4. At those numbers, in a project like Braceback, really sensitive to the price of metals. As the price of metal goes up, they become very, very big money generators.
Well, I'll say it because it was in the press release. Every 10% increase in the metal prices was 1,200% increase in the net present value of the project, right?
That's right, yes.
Let's talk a little bit. You were just in Europe, and you did a little tour there. Maybe you could fill investors in on what countries you went to and the kind of investors you were talking to and the feedback you were getting.
Well, one of the reasons we wanted to go to Europe was to meet with the bankers that do the senior debt for smaller mining projects.
Right.
And there's a number of them that are actually located in Europe. So we got a chance to go meet with them, and things went very well. We also got a chance to meet with our largest shareholders that are over there, and we had sat down. And one of the things I pointed out was, and it was from you, George, and I want to say thank you, is to look behind the press release, look behind the numbers of what a feasibility study is, and really, you know, try and take those numbers and say, okay, that's a risk mitigation document. If we look at what the numbers are today, what does our feasibility study look like? And if we use the forward numbers, and I'm talking forward as in future sales,
of course,
what does the number look? If I can sell all of my zinc today for production in 2012, 2013, what does it look like? And really the numbers are quite startling. And I think you can see generally, it's a proxy for how well your presentations go over in Europe if you see your share price go up and the volume of your stock trading go up.
Yeah.
And when you and I talked last, we were 25 cents. Went to Europe, and I think we touched 32 on very good volume. And we've been holding here in the 28, 20 since. So it's, it was a good trip in that regard. And it was a good trip because we were able to see our major investors, and that's in Zug, in Zurich. We got to Amsterdam and Oslo, and to Madrid.
Any other conferences or shows coming up that you're going to be attending? I mean, there's a lot of shows going on right now.
Well, our next scheduled show is Quebec, for the Quebec Mining Conference, and the next day I'm coming to Toronto to see you.
That'll be the end of November.
End of November, that's right.
Dave, I think that's been a great ear to the ground kind of summary for everybody. I think it's very important. That's why we do these. That people get those, investors get those nuggets of information relating to the industry and third parties, and I don't think anyone out there does it better than you right now.
I appreciate that, George. Thank you very much.
Anything
appreciate
else?
Being on the show.
Yeah. Anything else that maybe it's important out there we need to know about, or do we save that for our next conversation at the end of November?
Keep watching this space.
All right, so this has been Dave Patterson, as you all know, from Donner Metals, trades on the TSX Venture Exchange under the stock symbol DON. You can go to the website, get everything you need to know about the company, and also get over to AGORACOM, punch in Donner to take a look at all the latest posts, information on the markets, and most importantly, the interviews that we've been doing with Dave face-to-face. Thanks to everyone for joining us. Hope you found it helpful, and we'll see you again at the end of November. Have a great day.
Thanks, George.